Hi everyone, welcome to a new episode of Crypto Tips.
My name is Toby, and that's Heidi, and this is actually our fourth take.
We're getting really good at this,
just
guys.
Trying to goof around. But anyways, thanks for joining us. This is another Q&A for our Patreon group, our CT members. So if you haven't signed up, sign up soon because we answer a lot of these questions that people have. A lot of these questions are random, and sometimes they're really popular questions.
So this is our episode 14 of our AMA sessions. We've had quite a few of these already, but you guys keep pumping out really good questions, so we got to keep making these.
Okay.
First one is a good question.
They're all
good questions. A lot of people seem to be very happy with passive income from staking. However, most of the stakeable coins have a quite high inflation rate, so the real value gain is usually only around 1 to 2%. There are a lot of respected companies distributing more in dividends. I know comparing stocks with crypto is maybe not the best idea. Just thinking in terms of passive income, what coin has the best risk or inflation adjusted ASY in your opinion? So first of all, yes, these proof of stake coins are using inflation to incentivize people to participate in staking the coins in their network. That's where the rewards are coming from, these newly generated coins.
It's like PancakeSwap. 150% when I saw it a couple of weeks ago.
PancakeSwap, it's a whole other thing. I know I talked about this in the last AMA, but I am making a video on what no one is saying about PancakeSwap, and I am definitely addressing their emission of coins and burning coins and all that stuff. Anyway, this whole concept of, staking in general, it incentivizes people to lock up their coins. I know Cardano is a very famous one, and I think there's some confusion. There's no lockup period for Cardano other than the initial 15-day, about 10 to 15-day waiting period when you first start seeing your rewards come in. After that, it's every 5 days or so. Each coin is different if you are staking it or delegating it yourself. So for these people who are staking and actually receiving the rewards, that, the inflation obviously isn't going to hit them at all because they are earning more coins to kind of keep up with it and then some. So for example, if we're going to stick with Cardano, typically the staking rewards percentage per year that we're seeing is 5%, and their inflation rate is about 2%. So you do the math, you're going to get about 2 to 3%, profit actually from Cardano. But another thing is, there are coins that do actually require you to lock up the coins. Like for example, Polkadot. There's a 28-day lockup period. Other coins have a way, so you have to initiate undelegating or unstaking your coins, and that's a wait period. So for some coins, there is an actual lockup period. And so here's the thing with inflation, right? With cryptocurrencies, I think the fact that most of these are still so new, that rate of inflation is going to get gobbled up by a lot of new investors, a lot of newcomers as their market increases over time. I think it's going to get absorbed, and it's not, the effects of that inflation isn't going to be seen, right? It's not like they're going to hit hyperinflation or anything like that. But I think that's the main takeaway, actually going back to what PancakeSwap does, is pay attention. If this is something that really concerns you and you're looking for it, look for coins that have a burn rate, a burn schedule that helps to counteract that inflation, hopefully as automatically as possible and not manually. Again, something I will be touching on with PancakeSwap.
And also keep in mind that when you have something like DOT and you're staking it, that 28-day period of unlocking your coins, I mean, you have to really ask yourself, is it worth it? Because say for instance, we experience a 54% dip in Bitcoin. Well, that's going to bring the price of DOT way down, which you have seen. And so was it worth the little bit of percentage points of staking the coin when it's locked for 28 days so you couldn't take advantage of it going down and buying back at a lower price? So you have to just ask yourself, what's the opportunity cost for that?
Yeah. Also, Polkadot is one of the projects that has a very high percentage of coins locked on the network. So in that way, there's a lot of value locked on the network. It's a more secure network for that, but it also shows how many people are willing to write out a 28-day waiting period for their coins. So there are a lot of faith in that network, a lot of long-term holders who are willing to miss out on a dip.
That's like Cardano as well. I think there's like 74%.
Yeah, but there's no lockup period for Cardano. So.
There isn't, so that's pretty good. But then again, Cardano doesn't offer high rewards like Polkadot does.
15%.
Yeah.
Yeah.
Some would argue that the percentage of the price going up is more beneficial, but
yeah, when you're in a bull run, for sure.
For sure, yeah.
Okay, next question. Toby.
All right. I'm a BTC newbie. I programmatically. Heidi, come on.
We're both trying not to laugh.
Okay, I'm ready.
I'm ready too.
Programmatically stack X amount of Bitcoin every single day using swanbitcoin.com. There may be a better, less expensive way to do this, but I am looking for your current level where you would stack 60x and a lower level where you would stack 120x additional BTC. If Bitcoin crashed 80% from its all-time high, that would mean it would get to like $13,000. I don't think it's going to get to $13,000, okay? It's laughable that anybody would think it's going to get down to $13,000. I don't think so. So, because you have nation states now buying it, you have the demand is ridiculous, and you only have about 60 million supply of Bitcoin left. Yeah, if you didn't know about that, then there's other videos that you can look at. So with that said, if it goes down to the 20,000s, so I have very large orders, which I have told my Patreon members it would be unfair if I said them out loud, but like I have very big orders in the mid or high to mid 20,000s. And so when it goes to those levels, if it does, I wouldn't be surprised. I mean, really, would you be surprised? Bitcoin's already been down 54%. How many people were surprised about that? Pretty much everybody. So don't like think, okay, Bitcoin can't go below 30,000. It might, you never know. Yes, it's strong right now because nations are buying Bitcoin or whatever, but there's some big players out there that want cheaper prices. Anyways, back to your thing. This is why I dollar cost average, and I will be putting probably the same amount at these certain levels that I'd be buying Bitcoin in the 20,000s. All right, I'm not going to go crazy on one price. That's
it's like
it.
Dollar-wise, it's the same amount, but different prices. So it means you're getting actually more Bitcoin per that price.
Yeah, exactly. And I think by the time it reaches, if it ever gets to the mid 20,000s, I'm not going to have a lot of dry powder left. I'm just letting you know.
Yeah.
I'm going to be so ridiculously bullish because the greed and fear index is going to be like broken. It'll be like in the -5s or whatever. And, that's when I thrive. That's when I love it. When it's not only boring, but people are scared to death. That's when you want to buy. That is great. Right now I hate it when I see it coming up again, and I'm just like, yeah, the volume's not super high on this pump, and it'd be wonderful for it to be smashed down again.
It's unconvincing, basically, for you.